Awesome. Nick, thank you very much for joining us.
Absolutely. A pleasure. Thank you for inviting me.
Really, really fun. Do you want to introduce yourself for the audience?
Sure. Yeah. Well, you know me. I am Nick Perrett. I'm the founder and CEO of Prosper, digital wealth platform.
Fantastic. What made you wake up one morning or I don't know, maybe it was in the shower or before bed and think, I need to reinvent the wealth space?
Are you saying that's not something a normal person would do? Yeah, I get
maybe
it.
A little.
Yeah, most entrepreneurs have this sort of weird thing where normal people will put up with pain and discomfort, and entrepreneurs will just go and start a company to fix the thing that annoys them. And I was just very annoyed at not having the right answer to how to think about my money, and that came in. Yeah, a number of different guises. I got this piece of paper through from one of my old workplace pensions. I'm old enough to have had like 5 jobs or something along those lines, and got sent a bill for £2,500 on a piece of paper. And I thought, that's quite punchy. Oof. And I'm not sure I really ever see the value from this. And then, I had the perennial St. James's Place, type, and not just them, but wealth managers hitting me up for, let me take all this money off your hands and charge you 2.5% a year for the privilege, which I also wasn't massively into, funnily enough. And so I suppose, you guys have a slightly older founder. Not everybody is a 26-year-old founder. And I felt like a lot of the things that were being built, in the fintech world, mm-hmm. where the average age of the founder was a bit younger, were kind of not really building for me.
Right.
They were sort of, I'm going to help you save for your first house deposit. And I was like, well, I've got a house. I don't, so a lot of the use cases weren't really for me.
Yeah.
So combination of being ripped off, being slightly irritated, that's enough to start a company.
For an entrepreneur.
Yeah.
Which is the people who do start companies. No, but that makes a lot of sense. What are the core pain points that you are now solving with Prosper?
So I think there's several different bits of it, actually. If I think, okay, if I don't want a wealth manager and I don't want a trading app, then what is it that I actually want? And I do want all of my money to be sort of mobile first in orientation. Right. I don't want to have to enter in some obscure number to get into my account. I don't want it to be on maintenance on a Sunday. All of the things that used to really annoy me. So I think there's an element to a high quality digital user experience, mm-hmm. which a lot of people say is table stakes, but I think it's still not there for what I'm looking for. So it's worth saying.
Yeah.
Then I think there's an element which is about a kind of where the investment world has gone. Mm-hmm. And this is specifically the range of things that I can buy on a legacy sort of wealth management platform tend to be limited to public market stocks and bonds.
Okay.
And I, are coming from a generation who's much more digitally native and much more interested in, having worked in a lot of venture and private equity-backed companies, I'm interested in private markets. I would like to be able to have access to things. I'm interested in digital currencies, digital assets, and I'd like to be able to have access to those things. And I can't do it in the platforms that I want. So if one is sort of a digital experience, 2 is with the right products.
Okay.
And then the third pillar, I think, is really about AI and service. So if you sort of unpack that a little bit, one of the things that I would completely love about the current wealth management industry is I can outsource a load of really complicated, boring stuff to a human.
Yeah.
So, I might be perfectly happy to do my own ISA. Mm-hmm. I can move money. I can move, even at my age, I can move 20 grand from here to there. That's fine. I can do that. But when it comes to, do I really want to do my annual tax returns? Do I really want to think about my inheritance planning and how I might use trusts to, to better handle it? I don't want to think about any of that stuff, really.
Yeah.
And nor do I have the expertise. And I'm very happy to pay, thousands of pounds to specialists who can fix tax problems for me, right? So I felt that there were a class of problems that were actually well suited to human advice, to having more than just a digital only platform.
Okay.
But I also sort of looked at AI as as an enabling technology to those things for a couple of different reasons. So, one, you and I probably both use AI a lot every day.
Yeah.
I think what is clear, you tell me if I'm wrong on either of these things, but I find the instant feedback and the quality of that feedback in terms of, I can literally type in something about inheritance and it gives me a bloody brilliant answer instantly. So there's an element of, I can see from a consumer point of view that this is a much more compelling interface than telephoning your financial advisor, waiting until you see him on a golf course or whatever it is for you. That's kind of annoying. And I also can see, and I know David has touched on this in terms of, your own operation of a bank. Obviously I did Tandem before this, but obviously there's loads and loads of ways in which you can use AI and machine learning to improve the level of automation that you do on your own processes. So, now in Prosper, 97%, I think it is, of first-time customer queries through the app are answered by AI.
Wow.
Right?
Wow.
Then we've got AI screening all of our financial promotions. We've got AI scanning all of our telephone logs to check whether the conversations are compliant or not. We've got AI-generated ICP personas that we test all of our advertising against. Like literally every part of the company is leveraging automation. Right? So I find that fascinating.
Those stats are almost unbelievable. That's incredible. But and I guess the thing that is easy to miss sometimes, but when you can improve your operational processes in that way, that has a customer benefit. So that 97%, they are getting instant answers to their queries. They're not having to wait for somebody to come along. That is incredible.
Correct.
As you're describing all of these things that you're solving, my head is kind of thinking like, where do you start? This sounds really complicated. Where did you start with Prosper?
So, as in hilariously, the first thing that we had, so this is my first day in the business was the 1st of April 22.
Okay.
Right? And I said, look, you've got 8 months till the end of the year. Let's get a team, let's get regulated, and let's launch the first version of the product, in 8 months' time.
Okay.
I was like, that feels like a kind of a punchy thing to try and do, assemble the car on the fly, ship something, whilst also getting the regulator happy with what we're doing. We actually did achieve it. So we had this milestone, which was called Nick's Pound. and the objective was, so I tried to get the whole team focused on one thing and one thing only. And that was, Nick needs to put at least £1 in production into an account for himself.
That's brilliant.
Right? That was it.
That's brilliant.
Super simple.
So real. Yeah.
Really real. And I had, we sort of sat, the whole team at the time. We were actually working out of a design studio from a couple of my guys that I used to work with for 10 years plus.
Okay.
And we were sharing an office to start with, right? And they had this very cool sort of loft on the top floor in Shoreditch with a lovely big table. And we were all sat around the table. And I was there with the app. I was like, right. And everyone was half expecting it to break, like obviously, right? First time use of a production piece of technology, and the money went in. It worked, and then actually we were pleasantly surprised because I didn't understand this at the time.
Yeah.
But I'd been talking to Sekel about. So Sekel is the underlying investment custodian.
Cool.
Platform. So they obviously have connectivity to the markets.
Yeah.
But a lot of what they have are for sort of traditional mutual funds, which only settle, once a day at 4:00. So you don't get it's not like faster payments where you get an instant, feeling.
Yeah.
But what I hadn't realized is, so I talked to them about that and I understood that. And I was like, okay, for a patient, long-term buy and hold investor, which is my target customer, they don't need to be trading with millisecond precision anyway, because they're going to hold this thing for 20 years, right?
Yeah.
But I randomly chose an ETF.
Right.
And then, of course, it was there. The investment was just in my account. So it was like, not really. I mean, arguably, our team probably should have sort of dug into the detail and worked out that actually some of this was going to settle quickly and some not. And how do we design the user experience to make that not feel weird?
Yeah.
Right?
Yeah.
But yeah, so it actually worked, and it was more instant than I thought. So it was actually a great Nix Pound milestone.
Shout out to your product and engineering team.
It was actually Ben Jackson, my CTO, is the shout out on that one because it just worked.
Nick, how do you, as a digital product, a digital first product? I mean, you mentioned exchanging strategies on the golf course, or I don't know, at dinner or whatever. How do you build trust into a wealth app?
So, look, I think there is a short-term answer to trust building, and I think there is a long-term answer to trust building. And I would say this to any entrepreneur thinking about the very early stage of starting a business.
Yeah.
You really want to be thinking as though you are a trust hacker at the beginning.
Okay.
Because you have no legacy, no pedigree. You might have reputation as a founder. People might have heard of you. They've certainly heard of some of my shareholders. They might have heard of Tandem Bank. But let's just assume that you're starting from scratch.
Yeah.
Your objective is really about hacking trust. And what I mean by that is not theft, grand larceny. What I mean is it's who has trust in my target customer base, and how do I leverage them for my own, to kind of reduce the perceived risk of engaging with a new brand.
Okay.
Right?
Yeah.
And for us, part of that was legacy banks, actually. So we have the likes of Santander or Aldermore or banks on our platform, and people know those names. And you'll see this in the customer feedback. It's like, well, I'm assuming that Prosper's okay because Santander would never have let them do this if they didn't trust them. Yeah. So there's definitely, the product providers piece of it is one. I think the other is media. So we had the good fortune to be mentioned by Martin Lewis to some old granny who was looking to park some money somewhere.
Always
it's like,
helps.
I would put it on Prosper. So that was that was the biggest single day in our life, actually, so far. But clearly people trust him, and they trust Money Saving Expert. They trust newspaper brands still, even though a lot of those are online, so the Times or places like that. Yeah. So I think there is an element of how do you hack that trust that is sort of products or distribution partners or even underlying technology, right? So Griffin is a good example, and I know you wanted to talk to me about, the sort of the process of thinking about Griffin. But one of the things that we noticed, and we knew that this was true having done Tandem, is that there's something about a bank that is just inherently trustworthy. Okay. Yes, you've got FCA, PRA regulation, which again is another trust signal. Yes. Right? Yes. That we were absolutely leveraging at the beginning. But I think those sorts of institutional ways of leveraging trust are quite important, particularly in the early stages.
Yeah, that makes a lot of sense. And I mean, even from kind of my e-commerce background, like things like customer reviews, they might seem small, but they make so much of a difference. Or getting mentioned in, thank you, Martin Lewis, for shouting out.
Trustpilot is the other one.
Okay.
Right.
Okay.
It's run by a good friend of mine. He was very candid with me in saying, Trustpilot's not really designed for startups. And I said, Adrian, I'm going to use it anyway, and I'm going to see how it goes. And actually, it's been, I mean, I can see why he said it's not designed for startups, because it requires a sort of a critical mass of user reviews.
Yes, okay.
And it's very sensitive algorithmically when you're starting. You get like one bad one and your rating is tanked. So it's not for the faint of heart.
Yes. Yeah.
But I think we leverage that a lot in our advertising, and I think people look for those trust signals. Right? Yeah, definitely.
You mentioned earlier that things like reliable technology are not table stakes, as in, they're not kind of prevalent in the industry. Why do you think that the kind of like traditional wealth industry is, I mean, dare I say it, a little bit behind in that sense, and so kind of fragmented, I guess?
The answer to the fragmentation is probably different than the answer to the technology.
Okay.
So if I unpack both bits.
Yeah.
So I think technology, it's not the world's sexiest industry. It's not like when I was in video games and everybody who was an engineer who wanted to work on cool stuff would want to work for those companies.
Yeah.
If you say you're programming a ledger, it's perhaps not the most exciting thing to do, right? So I think there's an element of that attracts a certain type of person that probably has come up through cultures that are not necessarily at the forefront of technology from a ways of working perspective. And I think that leads to, if you combine that with leadership who are not digital native or come from the technology industry, i.e. they come up through financial services, and without naming names, my favorite example of this was one of the wealth managers whose CTO was actually a qualified financial advisor, had never actually written a line of code or understood anything about engineering. And that's the person who's making your technology decisions, right? Yeah. So small wonder that these companies can spend hundreds of millions of pounds, re-platforming, because they have no idea what they're doing.
Yeah.
I think culturally, culture is a big reason for the industry being backward technologically. Okay. I think when it comes to fragmentation, it's actually not massively fragmented at a platform level, but it absolutely is at the individual wealth manager level. And it's because wealth managers, they're interesting because every single one of them is like a mini entrepreneur.
Okay.
So they sort of, the default has become that you're part of a network, but you'll see a lot of them actually have their own brands. So even though, pick Pigeon Financial Planning. I don't know if it exists. Apologies if you work for Pigeon Financial Planning. No, But let's say you'd have that. That might actually be part of Quilter's or St. James's Place's network.
Okay.
But they operate like a mini entrepreneur.
Yeah.
So I think, I don't know whether that's, by the nature of people who just want to be the person who's your trusted, friend on numbers. Maybe they don't want to work for companies. I don't really know what that is. It's interesting, but I think that's I see that as different than the technology problem. If that makes sense.
No, for sure it does. And I mean, the technology, the way you describe it as like a cultural issue and a kind of background issue, almost like a recruitment issue, then it completely makes sense. Speaking really honestly, I didn't think kind of ledger technology would be that interesting. And then you get into the weeds at Griffin.
Now we need to apologise to the people who are working on the ledger technology, both Griffin and Prosper.
Shout out to the banking
love
and
you.
payments team. Griffin, you are fantastic. Just released some very cool stuff as well. I think so. Anyway, I'm biased. How does Prosper make money whilst keeping fees so low?
Okay, so I think when it comes to fees, if I maybe start with why do I care about fees at all?
Yeah.
Fees, are the single thing that stand between you and a fantastic outcome. It's the only thing you can control is how much you're spending to have your wealth managed. Everything else, like the performance of global markets, you can't really control, right?
Yeah.
So I think every investor who's not thinking in a cost discipline way is probably doing themselves a disservice.
Right.
Even on my $2,500 bill from major life insurer in the UK.
Okay.
Right, for my pension.
Yeah.
That's money that I, now is compounding for my benefit. It wasn't, before I started the company.
Yeah.
So then you look at, okay, well, what are the ways that these companies do make money? Because obviously we've got to operate a business that is profitable in its own right. And I felt from looking at the numbers, just at a 30,000 foot level, these businesses are amongst the most profitable businesses on the FTSE, the listed ones. Right. So, if you look for 50% plus profit after tax percentages, not very many.
Wow.
Property classified advertising is one, like Rightmove and people like that. But investment businesses are wildly profitable. And they're not, and it's not only that they're wildly profitable at revenue levels of hundreds of millions, right? So that tells you, and the fact that they're employing over 10,000 people in one of those in the UK only, tells you something about both, it told me that, let's assume it's a very profitable industry. The revenue level is incredibly high. Arguably, they could be charging quite a lot less and still be a profitable company. So there's, on an absolute level of pound notes that I'm giving them, that could be lower. But I also felt very strongly, going back to the point on legacy companies and how they might not be the world's most efficient companies in terms of leveraging technology and so on. I also thought that their cost structure was far too high. So if I said, okay, well, I'm going to take your 10,000 number, and actually, if I believe that I can operate it with, I'm not saying this is true, but let's say it's 5,000 people, then guess what my cost level is? Like my profit level suddenly goes up to like 80% after all tax. I'm like, okay, so my I wasn't really thinking about it in any other way other than with technology, I can build a leaner, faster, I can build something that is actually faster, cheaper, and better, which is controversial, because normally people say to you, you can only pick two of those. Right? So I think for us, it's just about lowering the absolute level of money that I take from you. And why am I doing that? I'm doing that because I fundamentally believe that your money should be compounding for your benefit, not just mine. Right? Now, I've got to operate a business and I need to stay in business. But actually, I felt that there was more than enough room. And we don't. So for that reason, we, current financial model, don't know whether this is going to be the financial model that we use forever. But is based on cash and margin that we make on the cash. That allows me to basically go, you can have an entirely free pension. You can have an entirely free ISA. You can do all these things without me needing to charge you. And we can still have a profitable business with that.
That's incredible.
So,
like you say, the combination of things that can be optimized seems quite unique and really like a huge opportunity.
And I think if you think about it as a long-term customer relationship, then I'm not feeling like I have to monetize the hell out of you on day one. What I'm feeling is I am attracting you as a valuable long-term customer whose wealth, you're working in the technology industry, your wealth is going to grow. And this is me thinking about your future.
Thank you.
You're going to do very well. You're going to have a lot of money over your career, right?
I hope you're listening, Griffin.
Dave's wage bill goes up through the roof. And you, so I think about what are the potential future needs that you're going to have?
Yeah.
And I'm not in the market helping you get on the housing ladder. I'm in the market helping you figure out how do you save for your kids' future or whatever it happens to be.
Yeah.
And I believe that if I attract the right kind of people, then the lifetime value of those people will almost take care of itself.
Yeah. And I guess this plays into the kind of long-term trust that you're trying to build with your customer. Yeah, for sure. That makes sense. Nick, this is not your first entrepreneurial endeavor.
I'm glad you didn't use the word rodeo or call me a veteran. Those are the two things that I'm like, that'd be cut.
I was this close to going for rodeo. And I was like, hold on. Yeah. I've had that one too many times as well. Endeavor. But maybe actually let's start with, do you want to give people a quick overview of some of the things that you've done before? And you mentioned Tandem Bank before as well. Yeah.
Well, Tandem was the first fintech business that I was involved in.
Okay.
And obviously I wasn't CEO of that. My current business partner, Ricky, was. Mm-hmm. I was chief product officer of that right at the beginning. And actually it was originally, is a tidbit for you, if you go on Company's House, then Tandem Bank original name was R&M Financial, or R&M Bank actually, R&M Bank, which was Ricky, Nick and Matt Bank. And Matt being Matt Cooper. So the original, so I'm indoctrinated into Company's House history.
That will never leave Company's House.
which I'm not sure is going to make it on my tombstone. But yeah, that was a very big move for me because it was changing industry.
Yeah.
So, the majority of my career, as I said, I was CEO of a video game company. Yeah. So really nothing to do with fintech, kind of like your retailing or e-commerce experience, I suppose, before. Yeah. It was a fascinating time to build a digital bank. Yeah. Now people think, oh, well, that was, the time when Revolut was building, but Revolut really wasn't a bank.
No.
Only very recently did it. It was a foreign exchange app when we were starting Tandem. Okay. And we, so the four banks were Atom, Starling, Tandem, and Monzo. And obviously Monzo, Tom Blomfield, is a shareholder of mine now in this. So you can see that the world in which those four businesses have created an ecosystem. Yeah. Right? From that, everybody who was at Tandem is either, they're in Prosper or they're in Zopa. Most of the management team and people working in, they're working in other places. Yeah. Both in mainstream fintech and in digital. Our old chief people officer is in the digital asset space. So it's been a interesting 10 years.
That's
and
really,
scary
really
that it's more than 10 years.
Sorry to bring it up.
But that was one of the reasons that I was so happy that that Griffin existed.
Okay.
With it's not, I don't say this lightly because I know how hard starting a bank from scratch is. And I would not have wanted to do that again for the purposes of offering a wealth proposition. Yeah. Right. And so the fact that a bank as a service exists that didn't exist when I was starting Tandem, that's amazing opportunity. Yeah. Really great. And I think it's really great for fintech in general, actually, that the FCA has supported those kinds of businesses.
Yeah. It is a very unusual business model in many ways, but incredibly powerful how it can hopefully enable people like Prosper and others. Yeah, but there's a few things that kind of come to mind when you mention that. How did you find that switch from CEO of a video game company to chief product officer at a bank. That is not the kind of most typical journey.
No. No. I actually didn't find it that problematic.
Okay.
Because let's be honest, if you're building software,
Yeah.
the way that I looked at it was, I'd gone from one, arguably the most complex software on planet Earth
Yeah.
is a video game.
Yeah.
Why? Because you got illustrators, you got artists basically trying to work with PhD physicists who are programming collision and deformation, trying to work with behavioral psychologists who are programming what makes fun. So you throw all those people into a room and you try and get them to build something that works at 60 frames a second. It's like really, really hard, like super, super hard problem.
Oh my God.
And so for me, I kind of went from one absurdly complicated piece of software to another absurdly complicated piece of software. So I don't think I really, perhaps the thing that was the biggest thing that you needed to really overcome was the slower pace that is inferred by regulation and compliance.
Yes.
And if you were to ask me, the one thing that I really worked hard at was how do you do compliance in a lean way?
Okay. Yeah.
Like, how do you actually do that?
Yeah.
And I think a lot of that is also cultural.
Yeah.
In the sense of, and I was having a go at the way that we were approaching crypto regulation.
Okay.
Around this notion that consumer duty, you can't apply it to crypto. And I was saying, actually, without having to change some of the way that the rules were.
Yeah.
But actually, it's a cultural thing that's driven from a set of, really principles that the people that you're hiring, you need to hire people who are not out for themselves, only, who are not inherently greedy, trying to screw over the customer type people.
Yeah.
And if you do that, then there's nothing stopping you having that permanently in your mind. And actually, human-centered design as a kind of way of thinking about the customer, their unmet needs, how might we solve those unmet needs in the fastest, leanest way?
Yeah.
By definition, you shouldn't be doing something that harms them, right? If you're actually thinking that way.
Yeah, that's very true.
Yeah, and I think video game people were slightly worse dressed, actually. There was a lot of black leather trench coat action going on.
The physicists or the illustrators?
Not in the banking engineers, no. But that was the biggest difference. Sartorial.
That is an insight. And then, are there any, coming into starting Prosper in 2022, were there things that you said to yourself, I am definitely not going to repeat that mistake? I mean, you mentioned the positive of there's a banking as a service, but there's Griffin. This is a different landscape now. But were there lessons or learnings that you took into Prosper that you were really grateful that you've had that kind of tandem experience to help you?
100%, and two specifically. One was around the fact that we as a nation are still quite a cash-oriented nation, right? And you'll see this with Rachel Reeves's agenda at the moment in terms of how do we. And I actually don't believe that the right answer to this is a big advertising campaign from three big incumbents, actually. But I do completely understand, when you've got 11.5 million people opening ISAs, but 9 of them are cash.
Wow.
Right? Of 11. I was looking at that data going, okay. And you look at the amount of financial wealth that we have, and it's much, much, much smaller than the amount of cash wealth. So when I say financial, I mean invested wealth.
Yeah.
So if you look at it that way. So I think that insight from Tandem was really instrumental in how I thought about managing money holistically.
Okay.
And then the other thing, the second thing, I think was and may their souls rest in peace, Nutmeg's name now gone, JP Morgan. But the Nutmeg experience of actually long-term wealth customers can be, if you don't have a good strategy, can be very expensive to acquire.
Yeah.
And if you're going to charge very little, then the payback period is very long.
Yeah.
And the lifetime value on a small amount of assets is not very big.
Okay.
So there's a kind of a fundamental, and I wouldn't say this is true of every venture capital investor.
Okay.
But certainly there was a kind of wealth tech, which was driven by that first generation, basically taking a lot more time, costing a lot more money, to get to an outcome than anybody at the time thought.
Okay.
Right.
Okay.
And I think we have benefited massively actually from observing that and going, let's not do that.
Yeah. It's kind of maybe a good example of how kind of I don't want to say second mover because I guess the products are different, but that just having the benefit of time and seeing how things develop.
100%.
Yeah.
100%. And I think there are various examples where the thing that came first actually inspired a bunch of things that are different that came after.
Yeah.
Same with, I think if you look at our youngest customers, these are the people that I wish I was. They're kind of like way smarter than I was at their age. These are like core Gen Z customers.
Okay.
Who are not our ICP, and we're not spending money to acquire them, interestingly, but they're coming, they're finding us.
Wow.
And a lot of them are coming from the neo-broking apps, the Robin Hoodie type things.
Yeah.
And you're sort of saying, well, why are they coming from those places? And so I actually went and interviewed a bunch of them. And of course, what happens is they all discover trading. When they're in their early 20s, they go and buy a load of companies. They lose a load of the money.
I did that.
There you go. You're one of them. And then they go, there must be a more sensible way for me to manage this. And then they end up at Prosper, the enlightened. So I think, but if those products hadn't have been built, then people they wouldn't be learning and they wouldn't be coming to us.
Yeah. That's such a good point. That's such a good point. Because, I don't know, 10, 12, however many years ago when I lost my £100 in stocks, I didn't have a Prosper to go to kind of graduate to. That's super interesting. You mentioned it was nice that you had Griffin. Full disclaimer, we work together. Griffin and Prosper work together. We're very, very happy to work
This is
with
our
Prosper.
advertorial interstitial.
If you are at all not into promotions, please look away now. But on a serious note, what has Griffin helped you do at Prosper that you couldn't do before?
It's a great question. And I think it is a very valuable piece of Prosper because, just to put it in context for people who don't know Prosper, every single Prosper customer has a bank account in their name with full FSCS protection.
Right. That trust element.
That bank account is Griffin.
Okay.
But they think of it as, when I'm using Prosper, any money that I've got is protected in that core account.
Yeah.
And I think that what we were trying to solve for, in part, was a trust thing.
Okay.
Right.
Okay.
So indefinitely, when you say to somebody, and we're not quite there yet because on Griffin's own roadmap, you've got a bit that's going towards the reserve account, Bank of England, that kind of thing.
Yes.
Right. So I think in the long run, it's about your biggest advantage as Griffin is that your customer can own their brand.
Yeah.
And therefore, I don't feel like I'm sending money to someone else, which I think is really important. And so part of it is about the brand. part of it is about user experience. So
Okay.
what I mean by that is the immediacy of the feeling of money going in and out of your account, and
Right.
particularly if you think, if I'm going to trust a new brand,
Yeah.
it's a massive hurdle for me to go through the process of even giving them my ID to start with,
Yes. Yeah.
right, to this random company.
Yeah.
Then you're going to take the step of actually sending them money. What's the biggest thing you're thinking at that moment? It's like, are they just going to take it? Is it going to vanish? Is it going to get there? So there's a huge benefit to instant gratification
Okay.
of, yes, this is a legitimate bank account. My money has landed there
Yeah.
and I'm good. And we've had, at this point, hundreds of millions of pounds have flown into Griffin, right? Without issue. And I think those customers will be feeling good about that experience.
Yeah.
So I think that was the second bit. And the third bit was actually from a technical architecture point of view.
Okay.
Because we are building something that thinks about your money holistically. So at the moment, that includes, money that you have in cash, money that you have in investments. We're also now doing private market investments.
Okay.
We're also contemplating digital assets at some point. So you're already piling up the different custodians with the different client money accounts.
Yeah.
Asking any customer to save 4 or 5 bank accounts for different things in their phone is not good, right?
No.
So I think that sort of role as a hub
okay.
is actually, from a tech architecture point of view, all of your money will always go through this thing.
Okay.
If it's coming out of an investment account, going into a savings account, all of that routing is going through Griffin. And I think that, again, it's another user experience thing, but it's fundamentally about how do you build an efficient technical architecture to manage people's money.
Yeah, that makes sense. I mean, on the point about like instant gratification, that trading example that I was giving from many, many years ago, I remember like loading money in, and I'm not going to name which app it was, but it wasn't Prosper. But yeah, loading money in, and then my balance was still zero, and I was like, wait, where's this gone?
Money?
It was terrifying, even though it wasn't much. But it's trust. It's getting people there, and that's super interesting about the hub account. And as you say, you're providing lots of different investment options, but it's kind of that central point which lets you route things through. And
that's got to work. If you're don't worry, no pressure, David. But it's really got to work.
Nick, thinking forwards, what are you particularly excited about on the Prosper roadmap?
So I think it is probably the thing I'm most interested in and excited about, I guess, is what we just beta launched to a small segment of users on the AI front.
Cool.
Because I was very fortunate in video games to live through some major platform shifts, right? So the first business I had was you got a CD, DVD from GameStop or their equivalent game in the UK, right? I lived in America for a lot of this time. So you went from a box product to something that was online, to something that was in a social network, to something that was on a mobile phone. And then I left the industry because I couldn't be bothered with VR and AR and all of that stuff. But you're seeing very similar technology shift now from mobile to AI, where I think and whether the natural language is voice. So I don't know if you've come across this that product called Bordy.
No.
So it's like a social networking AI on your behalf. So you kind of give it some information, and then it goes off and finds interesting people for you to meet in a non-dating capacity, just to be clear. But those kinds of, like the ability to converse with a computer and or just type what it is that you want to know
Yeah.
and get an instant response.
Yeah.
As opposed to long form reading or watching videos.
Yeah.
Like, I find that interface shift is potentially really exciting
Yeah.
to be working in at this moment in time.
Yeah.
And none of us know whether that's going to, lead to, fundamental changes in the way that humans think about money.
Mm-hmm.
But it sure is a radically different opportunity to be building in.
Yeah.
And for that reason, I think it's really exciting.
Yeah.
Yeah.
Do you feel like because you started in this digital native way that also kind of gives you a head start in a sense to build in that direction, if that direction is the one that you think will take hold?
Well, so I'll tell you, so the first AI application, this is going to show my age, that I worked on was actually a computer vision application. So computer vision is the branch of AI that is about analyzing video and extracting meaning from from video information.
Yes. Yeah.
Right. And that was not done on the internet. It was done on a massive server I used to carry in a gigantic suitcase. I used to wheel a huge IBM server in a box around to do my live demos, right? As the young 20-something-year-old kid. So I guess I've been in and around the technology that wasn't sexy when I was building in it. I mean, it was, but for a different reason. You didn't have, billion-dollar outcome businesses back then, but you had cool products. Like ours was a really cool product.
Yeah.
And I think what that gives me is the benefit of seen this movie before type stuff.
Okay.
You're always a sort of healthy skeptic.
Okay.
Do you know what I mean? Like you're not gonna, you know what the real strengths and weaknesses of the technology are. You know how to sniff out the people who are talking. I'm trying to think of a non-swear word. Apologies, audience. People who are not telling the truth, the whole truth, and nothing but the truth. You can smell that.
Mm-hmm.
And I think, so I think it allows you to be excited, but to invest in a way that the probability of success is higher.
Okay.
Which I know is a little
deliberate choice. Kind of. Correct me if I'm wrong, but like not getting carried away with the hype. Being very deliberate about, okay, this is going to most likely work for our user base. Let's do a beta test. Let's not kind of, I think I understand. Yeah.
And really, really focusing in on what's the real value that I'm actually able to deliver, as opposed to, like, I'll give you a good example from right at the beginning of my career.
Mm-hmm.
One of the things that they were doing was so this was a technology, computer vision, that could detect. So it's the thing that you now use on your phone to log in with Face ID.
Right.
So it recognizes human faces.
Yeah.
Okay. One of the applications of that, I'll give you two examples. One that was useful, one which was complete hype.
Okay.
So the complete hype one was pick the face of a terrorist out of a crowd. Right. So this was actually true because this was triggered by 9/11.
Okay. Yeah.
And it was, taking this grainy VHS video tapes of CCTV cameras.
Yeah.
And they're like, can your computer pick out the face of a terrorist? And I'm sitting there going, well, if you zoom in on this video, can you as a human tell whether that's even a human? Can you tell whether it's a human first? And can you tell whether it's a terrorist? And the answer is inevitably no, right?
There's a few more factors at play.
But there were companies selling hundreds of millions of pounds of defense contracts, police force contracts. So I think it's that, contrasted with actually what we can use this technology for is to animate digital characters, or we can use it to spot, cancer in X-ray images, and it actually works. Yeah. Right. So I think it's that sort of, when you're talking about hype, it's that you really want to be. I don't want to be building a company that is anything other than genuinely true.
Yeah. That makes a lot of sense. And unfortunately,
Done.
I can't believe it's been so quick.
Yeah.
Nick, that was such a pleasure. Thank you so much for joining us.
My pleasure.
Yeah.
Thank you so much for inviting us,
Yeah.
and go Griffin.
Yeah, and go and download the Prosper app from your various app stores, whether that's Google, Apple, etc. It is fantastic.
Do
Yeah,
it.
I'm biased,
You will
but
be
it's
better
fantastic.
for it.
Yeah, for sure. Many thousands of
Thanks.
pounds. Thank you.
Awesome. Thanks.